Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate filings without falling asleep. Today we're diving into the Academy Veteran Impact ETF's recent shareholder report, and trust me, it's more interesting than it sounds, especially if you want to see how they're investing with veterans in mind. What exactly is in this report? Let's find out. This report covers the 6 months leading up to the end of January this year. It's like a checkup to see how the fund is doing in terms of investments and overall health. You can find this and other interesting information on their website. You can also call them. Alright, let's quickly talk about costs. If you had $10,000 invested, the cost for the last 6 months would have been around $18. That is 0.35% of your investment each year. Now, let's look at some key numbers. The fund size is about 73,391,000. They have over 100 investments in their portfolio. The portfolio turnover is about 11%. Portfolio turnover basically means how often the fund changes its investments. 11% is considered relatively low, which means they're not making big changes very often. Here's a peek into where their money is parked. The majority, almost 99%, is in mortgage-backed securities. These are investments based on home loans. A tiny fraction, about 0.5% is held in cash and other short-term investments. Let's examine the top holdings. Ginnie Mae, Took and Pauls make up almost 90% of the fund's net assets. Ginnie Mae is a government-backed corporation that helps make mortgages more affordable. Then about 8.2% is in small business administration pools. These help small businesses get loans. Ginnie Mae iPools make up the remaining portion of the portfolio at 1%. Now let's get to the important stuff, the financial statements, where we can check how the fund is doing. This table gives you a detailed list of all the investments the fund is holding, but it's mostly technical. We will not be going into details in that part. The fund also invests in some short-term investments, mainly through what's called First American Government Obligations Fund. It invests over $700,000 there. This is a really short-term, safe place to park cash. Okay, let's check the assets. Overall, we're talking about 73,390,505 in net assets after subtracting what the fund owes. The shares are priced at around 19.70 each. Here's where we see how the fund performed over the last 6 months. Their total income from investments was around $2,019.943. After deducting some fees, the fund made about $2,389,837. You get a net increase of about $656,217.80. After deducting some fees, the fund made about 2,300 Aussies. You get a net increase of about $656,217. Here's where we see how the fund's net assets or total worth changed over the last 6 months compared to the previous year. Net assets started at 73,600 and 73,300 and 90,505. This includes income, losses, distributions, and new investments. There were new subscriptions, meaning new investments in the company, of about 1,473,917, which helped offset some of the impact on the net assets from the losses. These highlights give you the financial performance on a per share basis, helping you zoom in on the fund's results. The net asset value started at around $20.18 and finished at around $19.70. The total return on investment was less than 1%. If you consider this and the previous year, it's around 5%. The expense ratio is around 0.35% and the portfolio turnover rate is 11%. These notes describe how the numbers were calculated, and it's good to know these accounting policies, especially if you are an accountant. How are these investments valued? It depends. Some are based on market prices if they're easy to find, others need to be fair valued if the market data is not available. This fair value is subjective, but generally done in accordance with the Investment Company Act. As a regulated investment company, they plan to share all taxable income with the investors, so they don't plan to pay income taxes themselves. This part talks about risks involved with this fund, and it's useful to investors to know the risks. Investing in government-backed securities carries risk mainly from interest rate changes. Fixed income securities come with interest rate risk. It means that these investments are going to change with the interest rates change. Here we understand who's in charge. Tidal Investments LLC serves as the investment advisor. They earn fees based on the fund's assets. US Bank provides banking and other services to the fund. These are pretty standard arrangements. How are the distributions being paid? How are taxes handled? All important. Distributions for the period were over 2 million. After January, there weren't any major incidents or announcements that would change these numbers significantly. So what's the verdict here? Academy Veteran Impact ETF has most of its investments in mortgage-backed and small business loans. It keeps the amount of investments consistent. The fund's financial performance shows some potential for long-term investors, with income covering all of the expenses, but the net value has decreased slightly. There's interest rate risks and market events that affect this fund. Overall, the Academy Veteran Impact ETF is trying to have an impact by investing in veteran-related things. It's something you may want to look into. Tord, thanks for watching. If you found this helpful, please like, subscribe, and leave a comment below.